Hello, everybody, and thank you for joining our webinar today. This is a TrendSpider webinar about raindrop charts with Steve Burns. I just want to do a quick audio check and make sure everybody can hear us. If you can, just say something in the chat. Awesome. All right. Well, thank you, everybody, for being here today. Thank you very much for Steve Burns for joining us today to talk about raindrop charts. We're just going to give it just another moment here in case anybody is still joining. I see a number of people are popping in, and then we'll pop right in and get started. All right, cool. So before I get going, just want to again say thank you to everybody for being here. It's a beautiful Sunday here. The market's going to open tomorrow. It's going to be an interesting week. So we're excited to talk about raindrops, which could be a tool that y'all use going forward to maybe help you get a sense for the markets and to improve your trading. Before we really get started here, I just have to do what the lawyers say I have to do and throw the disclaimer up on the screen. Obviously, we're not here to give trading advice. Anything we discuss here is mostly to highlight the capabilities of the TrendSpider platform, right? Always do your own due diligence and be smart out there. Investing is risky, all that stuff. So briefly, before we dive into raindrops, I just want to tell you a little bit about TrendSpider and who we are. So we're a new fintech startup. We're based here in Chicago and in Denver. We launched to the public about a year and a half ago in March of last year, and we have about 4,000 users today on our patent pending technology platform. Our mission as a business is to level the playing field for retail traders, and to do that using technology. I've been an entrepreneur my whole life, and I've been in Chicago, so I know a lot of the prop trading firms and hedge funds here, and they all have made heavy investments in technology and software development. In some cases, there's a 10-to-1 ratio of software developers to actual traders on their teams. All right, so our goal here is to bring the same type of technology that a lot of these bigger proprietary trading institutions have, and make that available to retail traders. We do that by enabling them to find better setups using technology, to help you guys visualize data in the same way that that prop shops and hedge funds do. And visualization is what is one of the things that this presentation in particular is about, because we consider raindrops to be a proprietary visualization. But that is one of the things we do. We also help people with analyzing charts faster, with testing and refining and creating strategies, and of course, planning and timing their actual trades. Some of the ways that we do those things is by addressing the problems that every trader has, right? We're all human, and thus we're all susceptible to biases, to curve fitting, to FOMO. I FOMO traded last week. I've been trading for over 10 years. There's a lot of problems that come into manual trading, and we try to use technology to help address those things and make you a more consistent, more efficient, smarter trader. This presentation is all about raindrop charts. So I'm gonna spend a little bit of time to tell you about what raindrops are, about how they work, how they're constructed, and different ways that you can look at them and interpret them. I'm going to then hand it over to Steve Burns, who's going to tell you a little bit about the SPY chart and some other charts that he's been looking at, and specifically use raindrops to do that. If anybody has any charts they want us to pull up the raindrop versions for, we'll happily do that after Steve's presentation. So please feel free to ask him in the chat. Any charts, any time frames, anything specific that y'all want to see, we're going to be more than happy to pop into, as well as any questions. If you have questions, please feel free to just ask them in the chat. Jake's in the chat; he'll help keep track of them and moderate them, and then we'll answer them as well. So let's talk about raindrops. Everybody here, I'm assuming, is familiar with what a candlestick chart is, right? Or a price bar or Heiken Ashi. Raindrops are another type of time scale price chart. When we talk about them, we're going to talk about their key points, so how they're constructed, how they work. We're going to show you a little comparison of raindrops to candles, and we're going to tell you a little bit about the potential patterns that exist within these and how they impact indicators and trend lines and other types of analysis you might do, fibs, patterns, and so forth. So the first thing to really talk about raindrops are some key points for you to remember as we go through this down further. The first thing is they do not have open or close prices. Raindrops do not have open or closes, and that makes them fundamentally different than most other types of charts that you're used to looking at. A traditional candlestick chart has an open, high, low, close. A raindrop has 7 data points instead of those 4, and those are the high, the low, the central VWAP, the VWAP for the whole period, the VWAPs for the right and left side of the period, which represent the first and second half, and the volume profiles for either half as well. So when you look at this and see what this kind of looks like when it is rendered, you end up with a illustration that looks like this. You'll see that if this were representing 1 hour, for example, 1 hour period of time in this raindrop, the left side of it would represent the first 30 minutes of that hour. The volume, the volume histogram along the bottom here represents where volume was. That means where the trades actually were during the first half of that trading period, so the first half hour in this example. The dash on both sides represents the volume-weighted average price for that half, and obviously the histogram on the second side represents where the volume was on the second side of this particular period. In this example, you can see that price clearly moved up with volume as this hour progressed and was higher on both average and overall in the second half of the period. This tells you more about the price action. An open or closed price can be completely different than this, and we'll see in some of our examples how raindrops and open and traditional candles diverge from one another in a very interesting way. The histograms on the right and left side of each raindrop are formed by taking the volume profile for that period and rotating them sideways and converting them into an area chart. It's very simple. There's no magic or black box functionality to this. It's simply showing you where the volume was during that portion of the period, and you can see that the area part smooths it out a little bit, so it's not like a jagged illustration. When you take it and put it all together, you start to form the actual renderings of the raindrops. And this diagram here shows you how you build them over time and what the meanings of each portion of them are. When you complete building a raindrop, you end up having the formation, and then you have to decide on color. And this is where it starts to get very interesting. Obviously, if the right VWAP, the second half of the period's VWAP, is higher than the VWAP on the first half, then that raindrop will turn green because price and volume have increased. And the same is true in the opposite case, right? If the volume-weighted average price during the second half of the period is lower than the first, then it will be red, all right? And that's a bearish raindrop. It gets very interesting when those two volume-weighted prices are at the same level. And the more volume that is part of that calculation, the more interesting it is. So as you'll see when Steve shares his screen and goes into the SPY, right, when you see a blue raindrop on a heavily liquid asset, something that is heavily traded, millions of shares flying around back and forth, and you see the volume-weighted prices exactly the same during an entire period of trading, that's meaningful. That's a doji in its truest shape and form. And it's not constructed with arbitrary open or closed prices. It's constructed with the volume-weighted average price. So we strongly like to look out for the blue raindrops. We think they're one of the most interesting formations in the platform, and we think that everybody should be cognizant of these as they're trading. So I talked a little about this earlier, so I don't have to spend a lot of time here, but this is just an example of the interpretation. Jeff, that's a really good question. I'll answer that in just a moment here. This is a sample interpretation of that. Here's how that works, Jeff. So as the period forms, as time goes by, the raindrop will be completely formed, and it will represent the period of time that has passed so far. right? So if you're looking at a raindrop on the 2-hour chart and only 1 hour has passed, that's actually a 1 hour raindrop. The left side represents the half hour, the right side represents the other half hour. As time passes, that middle marker moves, so to speak, and both sides will shift and form into their final shape, if that makes any sense. And I think Russ is our CTO, who's a great guy to ask questions of. I think he answered that in the chat as well. So let's talk a little bit about how these compare and how to really think about these and look at those. If you see this illustration on my screen here, we have 8 raindrops here along the top. These are 30-minute raindrops, so each half of them represents 15 minutes of trading. If you look in the middle, you can see what the actual 5-minute candles for that same corresponding period would have looked like, right? So the raindrop labeled E would look, like these candles down here, these red, green, red, whatever candles. And then the traditional candlestick is listed below. What I want to highlight here and take everyone's attention to is actually that middle one, E, the bottom in this little fractal we have here. It's very interesting because you actually have a red candle, right, after a downtrend. And a lot of people would look at this candlestick chart and think, gosh, price is declining, and I see no sign that it's going to reverse. Maybe some people would look at this and say that's kind of like a hammer. So that may signal some people to either stay out of this, right, or potentially sell it short, to be bearish, in other words. But if you look at the raindrop, the corresponding raindrop to this, you can see that it's actually a bullish formation. You have volume moving up on average in the second half of the period. And while it was very heavy during the first half, right, it was higher priced during the second half. And then you see a follow through on this move. This is very interesting. You might have some traders who would catch this trade from the 5-minute chart. They would say, gosh, price took out the low of that big red candle. To me, that's bullish. You might have people who missed that. But on a raindrop chart and a candle chart together, you can see there's a clear divergence there. And that's a different way to look at that and a different way to kind of understand the same exact information. I also want to point your attention to the candle A here, right? Candle A is a red candle, right? But it's actually a blue raindrop, right? Depending on the trend for this and what kind of support and resistance might exist around this, you may interpret that as a bearish or bullish blue raindrop. But the point is, when you see a blue raindrop, as you'll see in some of the next charts, you'll see that they do tend to predict volatility is coming. And that's an interesting thing to see here because you did have that big sell-off a few candles later. If anyone has any questions about this, I'm happy to pull this back up. You'll also, of course, get a recording of this. And if anyone wants to capture a quick screen grab of this slide, please go ahead and do that right now. Moving on. We've identified a number of potential patterns. Jeff, you're right. It could, to a lot of people, that could be a reversal signal. A lot of people define a hammer, though, as having a close above the open. It was a red candle. So depending on what school of thought you're in, you may interpret that differently. The raindrop was a lot clearer. Speaking of the blue raindrop, I just want to spend some time talking about different patterns that we found in these, right? Because we have identified some patterns. The blue one is the most obvious one, both logically and visually. But we also have identified different patterns that we call flips, balloons, double flips, things like that. And they're all very interesting in different ways. So I'm going to take just a moment to kind of show you a few of those. Double flips occur when you have a raindrop sharply flip one way and then flip the other way. As you can see here, and it comes in both a bullish and a bearish variety, right? And a lot of people would look at the red one and then the green one and see some indecision. But when you see them flip like this, we generally see those types of formations happen at points of reversal, which we found to be very interesting. So here you can see both the bullish and upside and downside flips. Obviously, we talked a little about the blue one, just taking a moment to dissect it a little bit. The volume weighted average prices are the same. I found through my own eyeballing that the larger and wider the range of a blue doji and the higher the volume, the more useful it is. So, you know, if I see a very long price range on a blue doji with a lot of volume, and that VWAP prices are the same, that's a very interesting signal for me and something that I really want to watch for, because that almost always leads to volatility down the road. And that's something that you see when you backtest these, right? You'll notice that backtests on blue dojis tend to predate volatility. Finally, on the blue dojis, they tend to form at points of support and resistance, right? If you take each blue doji on a chart and plot it out to the right, you'll see that price tends to consolidate in those levels, right? Tends to struggle in those levels. And that makes sense, because if you think about what a blue doji is, it indicates a point in price where the market was really indecisive. You know, it ended up paying the same price for an entire period for a particular asset that's very liquid, right? So it makes sense that price would take a pause next time it reaches that same level again. We've also identified a very interesting breakout pattern that we call the balloon. The balloon forms on a trend line break. So, and it looks exactly like a hot air balloon. So with that, I'm going to skip this and just move on to live charting. I'm going to hand the controls over to Steve, who can share his screen and pull up some charts and tell you a little bit about what he thinks of them, and take it from there. You with me, Steve?
Yeah, I am.
Awesome.
Trying to share.
Bob, to answer your question, weekly and monthly raindrops are coming soon. Currently, they're from 10-minute to daily. We can see your screen, Steve.
Okay. So you can see me up here at the 50-day moving average?
Yes, sir.
All right. I'll take it from here. I appreciate everybody showing up today to listen to our live webinar. The TrendSpider platform has been an amazing advance, I think, in the visual charting since Steve Neeson brought back Japanese candlesticks, what was it, 40 years ago plus. So, you know, this is just incredible to see the visualization of volume and price and the daily range around key levels like this. It really brings a new dynamic to trading. I know currently the chart is driven by headline risk and this endless back and forth with the China trade deal, but we still have technical levels that are holding up through all of this volatility. And each day seems like a huge rally or a huge plunge, but if we go back and look at the last several weeks, we are inside of a pretty defined range, surprisingly. The SPY price still remains over the 200-day moving average here. I mean, that is a long-term trend signal to the upside. You know, that's where we bounced last time. And if you look at a chart, well, actually on TrendSpider, you can actually go back test it, where you can use the SPY and reset and back test the 200-day moving average and see what happened historically if you would have bought over the 200-day and would have sold below the 200-day. So we're going to say 200-day SMA crossover is an entry, and say the 200-day cross under is the exit. These are templates that I've saved to make it a little bit quicker. It is easy to use the platform, but I've done this. So you test it to see what would have happened as a standalone signal, you know, or you can use it at least as a filter. So if you look here, you know, only being long above the 200-day and being in cash when it's under the 200-day would have returned about 650% return since back to 1993, 1994. And being buy and hold only did 550, but you did not have the drawdowns here. You went to cash, you stayed out of the bear market. So that's one of the biggest strengths to trend lines. But you know, you can use that as a standalone trend following signal, or you can use it as a filter, you know, where you're looking to go long above but looking to stay in cash below, or, you know, sometimes go short during bear markets if you play the short side. So that's fascinating that on TrendSpider you can just whip down there and backtest it real quick, you know, and forget about opinion. So we are over the 200-day moving average still, even with all the what looks like the end of the world Friday with the tweet about the endless China's tariff and not making a deal and all that. But we are still up here in the high end of the long-term moving averages. Also, we have the 5 cross under the 50. That's more of an intermediate term downswing, showing that we could be going lower. You know, that back tests well on many charts with the 5, with the 10 closing over the 50 as an entry signal, and then an exit signal when the 10 crosses under the 50. It's not for the SPY itself. It back tests okay. It's not the best on the SPY. It works better on growth and momentum stocks. But if you add some leverage, you can actually get some pretty amazing trend following returns with that as well. If we say the 10-day, 50-day EMA crossover for an entry, and then we get back out when the 10-day, 50-day EMA crosses under, and then we back test that. See, on the SPY itself, you know, it underperformed, but if we add leverage to it, you know, going back to that was back to 1993. If we go back to 2007, as long as SSO has existed, back test it on the SSO with double leverage, you amplify the returns, and you can actually outperformed it since the financial meltdown. You stayed out, then you got back in. So the equity curve on the strategy is much better on the SSO since 2007. So if you do, you can have some more alpha by adding some leverage, and you know what safer place to add leverage into the SPY. So just something interesting to look at the dynamics. I mean, that is a standalone system to buy when the 10 crosses over the 50. It is bullish. It doesn't beat buy and hold, but it does keep you on the right side of an intermediate trend. The current trading range is 294 is the key resistance, and it's right under the 50-day simple moving average. And there you see that neutral candle falling off of the upswing pretty harshly, and that's signaling the new range with the blue candle there. And we have not closed back above that 10-day, the 50-day moving average since then. So that is the moving average resistance, which is around the 294. I'm actually on SSO. I need to get back on. Actually, need to get back on SPY. So same thing with SPY. You know, since the well, that's actually a round candle. The candle here, we have had the 50-day come in as the resistance for the moving average since back here when it was lost with around the 294 resistance, and then we have 282 coming in as support down here, and we have made some higher lows here. We have made higher lows. We haven't undercut these previous lows. We've actually tried to drip higher, but we are inside of a 3-week range here. The relative strength index here at coming in at 41.37 here. We are slightly on the bearish side of the RSI split, and we could go as low as a 30 RSI. I would be looking to be a buyer myself around the 30 RSI. Historically, that is a good oversold bounce zone, especially for SPY, as there are built-in buyers of the SP 500. So I would be looking, if we do go lower, to be a buyer on that dip. The MACD just had a very slight bearish cross under on the negative side of the MACD chart over here. So that does show we have lost momentum, and we are definitely not going up. We are going sideways currently. And the MACD cross under, it does front run a lot of the swings to the downside and swings to the upside when you get a MACD bullish cross over or a bearish cross under. So that's always something to be aware of. The ATR here expanded. It actually broke out to a new recent high barely on Friday, because we have had a huge expansion of volatility, a lot of that driven by headline risk. So interesting that volatility has all been contained inside of this range, but we are under a expanding volatility environment. The volatility has been expanding for quite a while, and it started to damper down a little bit last week, but it went back to the upside on Friday. The down day on Friday was on a huge volume too. We have some big volume here coming in on several of these down days. The You know, for me right now, what I'm personally doing for my own trading plan, I wouldn't advise anybody else to do it. You have to do what is within your own risk tolerance. But I would be a buyer if we get the 10 crossing over the 50, especially on the SSO chart in back test. I would be a buyer of SSO using the 1050 crossover on its chart. If its SPY crosses over, that's something to see that we could be swinging back to the upside as a momentum signal. And if we don't get the swing to the upside and we do go lower, I'd be looking to buy the dip around the oversold 30 RSI. If we get down to that level, I would be looking for it to hold the 30 RSI and bounce, or if it closes under, to close back over to get me back in. So that's what I will be looking at next week, as we are in a range here, and you can see the resistance here and the support here until something breaks. So that's what I'm seeing on the SPY chart. I was going to turn it back over to Dan now if you wanted to look at other charts.
Absolutely, Steve. Thank you very much for going into that. I'm happy to share my screen and pull up any charts that anybody might want to see, you know, on Raindrops. So it's time for some chart requests. Otherwise, if anyone has any questions, please chime in. You know, this is a chance to get me and Steve and to answer anything that you have in mind. Okay. Very cool. We're getting some requests here. Let me share a screen up here again, and we'll pull that up. So this is a gold that Rich wanted to pull up. Any particular time frames or anything that specific on it? Sure. LD has a great question. What's my daily routine at looking at raindrops? So I like to look at them over weekends, because I like to do most of my trade prep on weekends. And what I like to do a lot is a split screen view, right? So I prefer to keep raindrops on higher time frames, because you know, the more volume that is part of it, the you know, for me, the more reliable the raindrop is. Right, and I want to see how it reacts around a support level or something like that. Right, so you know, here on gold, actually, gold's a great example. I just pulled this up on August 7th. We had a gap up to a blue raindrop, right, which has held since, and now it looks like it's actually breaking out above that, right, with this top heavy raindrop. Right, you know, one thing I look for is for them to confirm what I see on a candle chart. The other is I look for divergences, right? And a divergence example might be right here, where you have a red kind of inverse type of hammer formation here on this gap up, right? But you have a blue raindrop with the volume weighted price actually being even higher than the open or the close on the traditional one. So that's something that I look for. I also look for these to form at periods of support and resistance. So I think somebody asked for Beyond. Beyond is actually a great example for blue raindrops, because you see them all the time on this thing. But here's a wonderful example of a blue raindrop confirming a breakdown, right? You have a breakdown, blue raindrop forms here, right? And actually you can see on the candle chart, this was a green candle, right? That's another form of divergence right here. I'll stick a little arrow there, right? And I mean, you can see that these two charts, same asset, same data, same price information, but they're showing you completely different stories. So I'm not sure if y'all can see that, but that's one of the ways that I really like to use these. Is I look for how they tend to differ from the candles, right? Are they sending me a different message, and do they form near a support line or an indicator, or do they form kind of in part of a trend? If this blue raindrop had formed above this line, I would have been very bullish about BYND here, because you often see them when they form at support. It indicates price has hit a point of indecision, right, and is likely to pull back. But because it broke through and then kind of formed, you know, after retesting even, right, it looked pretty confirmatory to me, right? So let's see, Netflix, pull that guy up here. Oh, and it's another beautiful example. You have actually, I'm just going to go to the blue raindrop one. There is plenty of raindrop divergence here, right? And you can see I've charted Netflix before, but you have essentially a channel for a while here, right? And you have blue raindrops forming at peaks for the most part. There's like one here. It's kind of at the bottom of that particular move. But you see blue raindrops kind of marking the boundaries of the move. You see a blue raindrop form at this trend line up here, right? And you see the first raindrop after the gap down being blue as well, right? And then you can see how price respected the VWAP ever since then very, very closely. Pull up BA. Somebody asked for BA there. Boeing is another interesting example. You see blue raindrops forming at key levels all the time on this chart as well. So like what I would do here is I would try to find the support and resistance zones on the chart. That absolutely, Raj, I will add the stochastic right now so you can see what that looks like. But you know, I would look for the divergences between the candlestick chart and the traditional and the raindrop chart. I would look for support and resistance zones, whatever it is that you look for. Like I like to look at trend lines, horizontal levels a lot, right? So I would look for blue raindrops forming at horizontal levels, at trend line levels, right? And you know that would indicate to me. I mean, you know, here's a great example. You test this level twice here. Next blue raindrop, you pull up a bit. It breaks down, becomes resistance, and you start seeing these blue ones form there, and so forth. Let's see, what other stocks do we have in here? Let's see. Jake, did I miss any symbols in the chat? I'm just looking through here. I think we covered Beyond, BA, Netflix, ENPH. Absolutely. Apparently I've looked at this chart before too, at some point. Looks like that was back in July 30th. Again, you see a blue raindrop form right along this line. It pulled back into it. This one is not very blue raindroppy. You know, they're pretty rare in this chart. You do see them forming in this consolidation zone a few times in your bottoms. You saw one form right below this trend line here. And then on the breakout, you only have one. When they're rare on a chart, I like to look for them. You know, rare formations are always interesting to me. Excel, absolutely. Let's see what's going on with this guy here. Yep, and actually this blue raindrop right here is one of my favorite variations of it because it has a long, I don't know if y'all can see this, but it has a long price range, right? This raindrop range, you know, almost $2, right? Or maybe a little less than $2 here. You know, it has a bigger range than most of the other candles around it, you know, and it happened to form, you know, at least touch on lows from the 13th of May, right? And then you had a move up. Have another raindrop form here right at a moving average, right? This is the 50 period simple moving average, and you had this move up right immediately after that as well. When you back test these, and I'll take a moment just to show you that, right? If you just say, tell me what happens 1 hour after 5 candles after I buy a 1 hour or daily blue raindrop, you'll see that it'll generate a lot of volatility. Okay, and then pins and match, no problem. I'll pull this up, and you'll notice Steve touched on this a little bit, but as I pull up symbols, the backtest automatically runs, right? On pins here, you do have a bunch of blue raindrops forming. You have a sequence of them. This is one of the things I also like to look for, right? A series of them in a row. That's interesting. That just means prices, you know, markets being indecisive for an extended period of time. Some of these along the way, by the way, this green one are almost blue. You know, the price are just slightly too far apart, but they're basically, you know, for all intensive purposes, the same. You can see the VWAPs are at the same level, right? So you have a series of very tight price movement, tight consolidation on a volume-weighted basis, and then you have the rally up, and then you have another blue raindrop form right at the VWAP, right there, you know, and then it continued up a little bit more. So, you know, I find them very, very interesting when you see them form at, you know, any kind of support level that you may look at, right? These are the ones that I look at, but, you know, you may look at different ones. Let's see, Match was the other one. Match has been a wonderful stock for a long time. So on Match, you have this gap down to the blue raindrop thing that we see often, right? indicates that's a real gap down, right? You have price move up, first blue raindrop form, and then a rally, right? Another blue raindrop form right on the VWAP, one form right below the VWAP, right on the 50-period moving average and this trend line, right? You have another couple form here, so you have a cluster of them forming, and then you have this pop and breakout. Does anyone else have any symbols or anything you want me to touch on? Oracle? Gladly. Kurt, you absolutely can do Forex. I'll pull up British Pound USD in a moment here. Here's Oracle, and this is another wonderful example. You have a breakdown and a series of blue raindrops form before a continuation down, right? There's no magic to these. Like this is not some AI hocus pocus black box stuff. This is very simple math. You have the volume weighted average prices becoming identical on a heavily traded item. It's kind of telling you something there. Right, the key level gives you the direction, and the raindrop tells you that there's real indecision right there. So let me pull up. Someone wanted GBP USD, no problem. This is the British Pound USD chart, and you can see a similar type of thing play out. Right, you have blue raindrops forming after a sell-off up to a rally. Right, I wonder if there is some long-term support or something there that if we look further back we might be able to find, or maybe there's a trend line or something that it's touching on there. But you see a series of them form at the highs here. You see one form right before this big sell-off, and generally they're pretty rare. I mean, you do see them occasionally here, right? But they're not something that you see very often on this chart. Let's see. Oops. So, okay. Well, if anyone has any other symbols, I'm happy to pull them up. What's up? Yeah, absolutely. I'll happily share UNH. UNH has been an example that Jake really likes to use. I don't have the same annotations on my screen that he does, but let's see how this looks. All right, so you have blue raindrop, sell-off, blue raindrop, rally, blue raindrop, sell-off to a blue raindrop, and another rally. And I imagine if you go further back, you're going to see quite a few of these as well. Yep, high, low, and so forth. Let's see. Yeah, okay. So if you anchor, let me take the trend lines off my screen here. This is one cool thing I forgot to show. Thank you, Jake. If you anchor VWAPs off these, you'll find very interesting support levels, right? And an anchored VWAP is a type of indicator. It's a volume-weighted price that starts at a certain point in time. But when you do that, you'll end up, anchoring a VWAP from a point of indecision, right? In our opinion, it's a good way to do it because your only other option is to anchor it from visual lows and highs, which are meaningful, but they don't tell you a whole lot about the actual price action there. So we've been anchoring a lot of these VWAPs off the blue raindrops too, and that's another use case for them. Let's pull up TVIX. Let's see what we got here. You definitely have them happening a lot on these pops before they pull off on this symbol. Not all of them. But, I mean, here you have a little pop, blue raindrop, continuation down, a little pop, blue raindrop, continuation down, a little pop, blue raindrop. And then this tight one that formed at bottoms preceded a rally, to another pop pullback variation here. That's interesting. I haven't actually seen them play out quite like this on a chart before. And in the past, I mean, on TVIX here, you had the same thing on a pop pullback. Before pullbacks, and you also had this little tiny one form right here, right, with a very, very, very tight range. This probably would have looked like a doji, on a traditional candle as well before this big explosion we had in 2018. Yeah, absolutely, Caesar. So that's a great point and a great question. When I add other indicators to this chart, let's add Bollinger Bands because that's the one you mentioned. It becomes volume weighted, right? So because it's being drawn off a volume weighted average price, instead of the open or close, just like Jake just said. The indicators that you're using, all of them, including the stochastics, the RSI, the stuff, the upper level indicators, all are volume weighted, and they'll give you slightly different signals, and they'll also give you slightly different backtest results. Christopher, watch list alerts are on our roadmap for this quarter, right? So we are literally working on them. Right now it's a process though. We have to build a few things before we get to that. Bruno, absolutely. So we provide real-time data for Forex, crypto, and U.S. equities. There's a page on our website called Market Data that'll give you the exact details out of all of them. There's as far as U.S. equities go, it's a BATS real-time feed combined with a NASDAQ consolidated delayed feed to form our overall feed, which is why it says BZX here. But it is using volume and other info from NASDAQ. And then there's a list of 24 foreign exchange organizations that we get our Forex data from. There's a couple of very big ones in there, including like UBS, which is where the Forex information comes from. And finally, cryptocurrencies come from over 150 different exchanges, right? There's over 6,000 of them. Indices and futures are delayed. Sin, to answer your question, I mean, I don't know. I don't trade FX myself. But I know that we have a lot of very, very sophisticated FX traders that really like the Raindrops. They seem to work well on any asset. We see them work out on crypto. Bob, I'm a hodler too, absolutely. But they definitely seem to work out well on Forex. And I mean, you can see that if you pull up any of these like USD, any of these popular Forex pairs. You will see blue raindrops form in generally the same places, right? You have one at highs, at lows before rallies, you have, them along continuations. You have them all over the place, but they're pretty rare and they mean the same thing. Michael, they're not great on lower time frames unless the asset you're looking on is very, very liquid. I'll show you an example of what ends up happening. If you look at, like, for example, like Apple, on a daily chart, right? And you drop down to 10 minutes, which is the lowest that it goes on Raindrops, it'll look okay. And I can turn off some of these indicators just to make it cleaner, right? But if we put a symbol that is pretty thinly traded, like intracellular therapeutics here, right? You're going to see a lot more blue ones form because there's no volume or very little volume to a lot of these moves, right? So if I switch this to like a candle chart, you're going to see pretty gappy price action, right? And if you switch to a raindrop chart, you're going to see a lot of periods where it only traded a few times, maybe in the beginning or second half of that period. And as a result, the volume weighted prices are going to be blue. And you lose some of your signal accuracy by means of worse inputs, right? You just have less volume. So I hope that answers that question for you, Michael. I really don't look at these on any time frame under 1 hour personally. If you think about how they're constructed from 1 minute candles. Caesar, yes. I mean, they're great for all kinds of trades. You can use long-term levels and daily raindrops to identify, potential, reversal points for something that you'll then go day trade, intraday. Excuse me. We think they're a great way to remove like some noise from your analysis and a great additional signal. And if you have a lot of other stuff pointing in one direction and then you see a blue one form, or a very bullish, balloon raindrop form, it doesn't matter what asset it is, right? As long as there's a good amount of volume data as part of that calculation, it can be pretty useful. So I'm happy to pull up any other charts. One thing I just wanted to highlight, and this is something that I just think is really important to note about raindrops, is they do tend to cause volatility, or maybe not cause, but identify it. You can see if you blindly buy on whatever chart you're on, if you blindly buy a stock the minute it hits a blue raindrop and sell 5 candles later, you on average break even, right? You don't get crap out of it. But some of your positions on this chart were up 35%. Some of them were down 17%, right? 5 candles later. Without that additional indicator or tool to tell you which direction it goes or which direction it might go, you know, these just tell you volatility. If you want to look at gold, we can look at the volatility on gold when you see these. And by the way, you have a lot of blue raindrops forming up here in this kind of bull flag on gold on the 10-minute chart. You know, maybe it's not that reliable because it's a 10-minute chart. So let's see what it looks like. Yeah, I mean, it's probably because the volume just wasn't that low. Or wasn't that high for that. When you look at the volatility on gold, right? So if you blindly bought blue raindrops and sold them 5 candles later, you'd either be up 5% or down 7%. Jeff, yes. That's what a lot of our day traders will use it for. A lot of day traders will look for one of the big use cases for TrendSpider is set your alerts and then let the market come to you. So, you know, a lot of people would do something like, let's refresh analysis, get a clean analysis on this chart, right? Might say, okay, if, you know, gold pulls back to this blue line, you know, I might buy it, right? So, you know, you can create alerts on blue raindrops. So you can say, you know, let me know when it pulls back here. Let me know when there's a blue raindrop that forms here, right? And then you have an intraday opportunity on the bounce up that you could play. And, you know, if you saw it pull back here and a blue raindrop forms, you know, that might give you a swing opportunity or intraday or whatever. Everybody's different, though. Like some options, people really like to play the blue raindrops with like straddles or strangles, you know, those volatility plays, because they don't want to guess on a direction. They just want to say, you know, on this chart, every time a blue raindrops happen, 10 candles later, you know, there's been, you know, a move one way or the other of enough size to where I'll make money, you know, if I'm just betting on both ways. You know, I think it depends on your style of trading and on your experience. I mean, play around with this and, you know, see it where they form on your charts. You may find interesting use cases for them that we haven't even found, if that helps. Just checking to see. Does anyone else have any other questions, chart requests, or anything like that? Okay, Amazon. All right, keep on coming. Amazon is a fantastic one. Absolutely, I'll turn on MTFA. So let's look at Amazon on the daily chart here. All right. Get rid of some of these extra lines that I have up here. Right. And Amazon's great because you see blue raindrops forming all the time. You see them on moves up and you see them on moves down. And you see them clustering before moves, which is some behavior that we've found to be very interesting. You know, and you can see that here. And then if you look at SPY, we can show you what Jake wants me to highlight here, which I will do using multi-time frame analysis. And I don't know if anyone here has played around with MTFA. You know, this presentation is largely about raindrops, so I wanted to kind of keep it limited to that. But if you're big into multiple time frames and using raindrops with them, you can do something cool like this. You can add a monthly multi-time frame indicator to your chart and get rid of some of this other noise here. And we'll switch to a candle chart. And you can see how price has really respected the monthly Bollinger Band, which is also the 20 period SMA. I forgot that those are actually the exact same thing. And you can see, you know, it's very likely that price will pull back to this level, right? That's something that we've been watching. What's cool about this is a daily price chart, but these Bollinger Bands and indicator lines are all from the monthly period, right? So let's there was an anchored VWAP there. And you can see if I add that here, it does the same thing, right? The anchored VWAP gets very close to the monthly 20 period SMA. They actually kind of come to the same exact point. And that just, to me, I mean, if I see SPY pull back down here and in the high 270s, low 280s, we see a blue doji form, you know, that could be something very interesting for me. right? To keep an eye on, like that's a blue doji, that's real indecision, especially if it's on really high volume at numerous key price levels that have been respected numerous times in the past. I mean, this weekly 20-period SMA has been support or resistance multiple times, right? And this Alpha Trends anchored VWAP has been support and resistance during the most recent pullback, right? So it's just would confirm to me that a bounce is more likely than continued selling. I don't know if there's other signals I'm missing there, but that's how I would read that. LD to anchor VWAP, you literally right-click on any candle or raindrop and just click create an anchored VWAP, and it just pops it on there. And what's really cool, like say I want to watch these levels, and like personally, I know Jake is big on the 20-period SMA here. I would watch the anchored VWAP myself. You can right-click on it and create an alert and say, okay, alert me when price comes close, touches, bounces this thing, and you can watch it from the 15-minute chart to get a faster alert. And you can put this out, a while. So now I don't even have to watch this. Ron, yes, we'll put the link in the chat, but we do lots of webinars about the product every week. You can sign up on our website for any of those. You can also watch videos on our website, and you can watch replays of past events if you'd like to. And of course, our blog. We post a lot of articles and videos to the blog as well. I really appreciate it, guys. It's a lot of really cool chart requests. I hope everybody found some value in our presentation on Raindrops. I really want to thank Steve for being here today. If anyone's interested about Steve or New Trading University, there's really very few people who can teach trading. Yes, I will go over the roadmap. Absolutely. There's very few people who can teach trading like Steve. So, we definitely recommend you pop over there. And then if anyone's interested, in taking us up on this offer, we have a coupon code for this webinar, and it's worth 30% off for 12 months. And that's after your free trial. So if you want to take a free trial and then try the product out, you definitely could do it that way. And we would definitely welcome anybody who wants to join and patronize the product and support our work. And then finally, for Jake asked me to put our roadmap up here, so that's what this is. This is what we're building right now in dark gray, right? That's what we just finished building in green, right? Raindrops were part of that, so it's a new feature, and so is a strategy tester. And then going next, we're going to be rolling out market scanning, so the ability to search the market and say, give me any chart that has generated a blue raindrop, which we think will be a very powerful feature that a lot of people will really like. We're also working on pattern recognition, so to highlight heads and shoulders, cups and handles. Ron, I will paste that in the chat. I'll put it back up in a second here. But we're working on pattern recognition and alerts an entire watch list, which is a really big feature. After that, advanced backtesting enhancements, the ability for you to bring your own broker data. That will include the ability to bring your own futures data if you so have it. And then finally, early next year, middle of next year, we're going to be rolling out the ability to actually trade from inside of the platform and to actually automate your trade signals. So you can semi-automatically place orders through the platform. So a lot of cool stuff coming. For those who missed it, the coupon is up on the screen here. It's NTUEX29. That's valid for about a week from now, right? And it will give you 30% off if you choose to renew after your 7 days. And if you decide to do that, we'd be forever grateful. It supports our work and helps us build out the roadmap and build new features. Raj, we use a number of different definitions for our candle patterns. There's links inside of the system next to the patterns where we have a definition that you could look at. So if you click on patterns, there will be docs links for a lot of these. And we're going to be adding quite a few more of those pretty soon, including different categories for them. Like we just added Rod Smith's the strategy, or the strat as he called it, which are his inside-outside day patterns, and we're going to have a whole lot more of these. Actually, we're building a whole new team internally to just add patterns and indicators pretty soon. And then regarding TD Ameritrade and E-Trade, absolutely. I mean, look, those are two of the main brokers out there. We'll probably not do them first, but you know, we'll definitely be adding them. You know, we want to, like, our vision here is to cover every market in every part of the world and be able to support any type of trader. So that really does mean adding every broker. Chris, the most typical use for workspaces is to have more than one browser tab open or to more than one monitor. Some people like to have multiple computers, so they'll have, you know, different workspaces open on different computers. And then some people like to have different setups for different styles of trading, right? So some people have, you know, different layouts they use for swing trading versus day trading, so they have a workspace for each. Note the watch lists are unique to your work. Thank you, Jeff. We hope so. Kurt, you can actually have up to 4 charts on your screen. And what's cool is each chart can have up to 2 time frames, right? So you can have multi-time frame analysis and have 1 hour versus, or daily versus monthly, 2 hour versus 4 hour, you know, 5 minute versus 30 minute, and whatever else you might dream up, all on one chart like this. So you can get a lot of different perspectives all at once. So again, thank you, everybody. Thank you, Steve Burns, for being here. You know, again, there's a coupon code on the screen. A recording of this webinar will be sent out, and you know, I'll stick around for a few more minutes if anyone has any more questions. But we're going to end the webinar now. So thank you, everybody, and take it easy.
Thanks, Dan.
Thank you so much, Steve. You're great, and we're really thankful that you were here.
Great to be here.
Take care.
Thank you.